What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get some free stocks, make sure you check out my link below. Hey, I'm Chris saying, and today's video is about stocks I sold. Listen, guys, it's been a crazy week. I want to share all of my moves so that you can see if you made similar moves or need to make similar moves, okay? But listen, if I helped you in any way, whether I was help you make some money or give you a new perspective on the stock market, please make sure you like and subscribe and join us on the journey. Without further ado, let's take a look at my portfolio. Okay, guys, I am back from vacation. I'm going to be slowly getting back into my groove so that we can get back on our A game and begin to dominate the stock market with all of these new opportunities we now have in the market. But before I jump into anything I have on today, I first have to across the board share with you what my week was like, what the day was like, as well as how much I'm down over the past month. I always want you guys to see the good and the bad because we're going to crush 2021, and it's opportunities like this that allows you to do so. One reason I was able to go from 0 to 100K last year was largely in part due to COVID-19 and the stock market crash. Okay, similar to that, this crash isn't in comparison. However, when stocks fall, it allows for a recovery that is much more massive than just the up day-to-day stocks that you get. So don't panic, but be ready for a massive comeback when things begin to turn around. In the meantime, let's take a look at how much I'm down on the day. Check it out. The day actually finished strong, but throughout the day, it was a very volatile day. So listen, if you're not built for the stock market, this might not be the game for you, okay? You might need to go find something else to do with your time. The market will go up and it will go down. Don't never question any play that I give you guys. I don't care what happens. If I tell you about a play, it is what it is. However, you can never account for how much a correction and or flash crash or a stock market crash will take a play further down. Think fuel cell, for example. I know where their moving average was at for that play. It was 20. However, if a play, for instance, gets hit with a whole market correction, everything goes out the window, and it's no telling how far a play can go down. APXT would be another example, but I'm just scrolling over showing you the ups and downs of the day. Okay, we had some highs around 920, then everything crashed from here. I was down to the 130,000s, even far as 135,000. So at one point in time, I was down basically $10,000 within the day. It did make a strong recovery to finish out the day. Okay, now let's look at my week. Okay, on the week, I am down 3%, a little bit over 3%, which is again roughly $5,000. Again, this week coupled with last week, again, it's just been down week after down week. However, perspective matters. For me, this has been a buying opportunity after buying opportunity. I love a sell any other time. I love them even more in the stock market because I'm an investor. Let's look at my month. Listen, guys, I am down 20,000 in the month. Okay, and this is from this date of March 4th, 5th to February 4th or 5th. Okay, that time frame, I'm down 20,000. So when this recover alone, I'll be up around 170,000 without adding another dollar to my portfolio. This is the power of the stock market, but this is why you got to stay 10 toes down during these, again, volatile periods such as we're having right now. This is a correction, and a correction simply means we are correcting the stock to the price your play is really supposed to be at. All of this inflated stuff that the government put on and boosted these share prices up, now we're getting the stocks at the price they are supposed to be at. Embrace it, guys. Embrace it. Today, I want to talk to you guys very briefly about stocks that I sold today, okay? Stocks that I sold consisted of Starbucks and Uber, okay? Listen, guys, in the stock market, you never want to sell any play that you're down in, okay? We never take losses in the stock market. The closest thing to an L I ever take is what's known as a paper loss. I never lose money unless I'm purposely trying to lose money for tax purposes only. Other than that, I always dominate the stock market, and if you listen and follow closely, you will do the same thing. You can't panic sell or you mess up the whole play, okay? The stocks I sold today were Uber and Starbucks, okay? And what did I buy? I bought more APXT. Check this out. It's sitting at $12.11. I'm currently sitting at an average cost of $12.64. I had to average down from $13, just like I teach you guys to do. Don't complain about a stock being down. If you can, you have to do what you can to, again, get it lower. I'm banking on APXT going through the roof once it finally takes off, okay? And so I have no problem averaging down, but you average down so much at times, you may run out of money. You may not have the opportunity to do so. So in my case, I had to get rid of one of my winners, a winner that I'm not too concerned about because I can rebuy that later if that pullback's ever. These two stocks were actually doing good during this correction. And so I said, you know what? Uber was up. I was up 100% in Uber. I was up 60% in Starbucks. I took those profits and I bought some more APXT. That is how you play the stock market, okay? When you run out of dry powder, you then look for some winners that are not fully long-term, but some that you can maybe use some of the equity out of to get into another play. And the other play that I use, the profits from selling Uber and selling Starbucks, I bought some Tattooed Chef, okay? I told you, I love this play even more under $20, okay? The goal was always to get this under 20 at 20, but primarily under 25, okay? Under 25, this play is golden regardless. I don't care if you got it at 23. I don't care if you got it at 22. I don't care if you got it at 25. However, when you see these sales, you need to take advantage. And if you are out of dry powder, then you need to look around your portfolio to see are there any winners that you can kind of take from and then put into a play that is down, but you know that has potential. Remember, guys, nothing changed. These are still home run plays. Nothing changed about anything I've ever said or shared with you on our 100K journey. That's why we're going to still dominate. We're just going to deal with this volatile time as an opportunity to get more shares at a lower price. And that's exactly what I did. I'm currently sitting at 445 shares now, Tattoo Chef. 1983. I was able to get this under $20 now, okay? I was cool with 20. Now I bought so much more of it after taking profits, after selling Uber, after selling Starbucks, and putting the money into this play to bring my average cost down under 20. Now I'm like, let's ride. Let's rock and roll. Let's see how far this plays goes up. I'm even loving it and more comfortable in it now under 20 than I was when I had it at the 23, okay? And that's why you ease into your plays, guys, so that you can always have room to average down. You never put your full 125 shares in at the first price. You want to ease into it, or you guys know our word around here is what we call and know as nibble, okay? You buy some at 23. If a dip happens, it come to 21, you buy some more. Like in this case, it dropped to 20, we bought some more. I saw it even go to 17. I couldn't get it at 17 because I was buying some APXT. By the time I jumped back over to Tattoo Chef, it was back up to 18, 19. And so we bought it at that range. That is how you play these dips, okay? Really quickly, you guys know at the end of every week on this 100K challenge, I like to recap not only the week like I did at the beginning of this video. However, I want to now update you since I had to sell 2 plays to have enough money to buy the plays I just shared with you. Now I want to show you what the portfolio consists of now, okay? So let's take a quick run through what I'm currently holding so that you can see and make sure that you are getting yourself in and out of positions into these plays on our 100K challenge. Stock number 1 kicks off our dividend growth plays. These first 4 will be our dividend growth plays for those of you that are on that challenge with us, okay? Main Street Capital. Next is AT&T, okay? Next, B&G Foods. Next, Capital Southwest, okay? Next, we have Revolve Group. Next, we have Neo. Next, we have Disney. This is my reopening play. Next, we have Apple. Next, we have Facebook. Next, we have Nike. That area I just passed would have been Starbucks and Uber, okay? They got sold today. Those were the stocks I sold, so make sure that you make a note of that, okay? Next, we have Tesla. Tesla, you guys better been buying Tesla in the fives, okay? This is a buying opportunity. This is a $1,500 play. Don't miss the boat. Plug Power. Next, we have DraftKings. We hit a home run in this very recently. However, I don't want to talk about home runs when the whole market is getting crashed. So I'll put that to the side for right now, okay? Next, we have Fuel Cell, okay? This one is all the way back down to where we started getting in this at. I got this at $10. It is down to 13, okay? It came down from 30 down to 20. Now it's down to 13. You got to decide for yourself. Do you want to ride it back up to 20? Or do you want to get out of this play? Next, we have APXT. Next, we have Macy's. Another home run in the making. Next, we have Dropbox. Next, we have American Airlines. Next, we have Wells Fargo. I hear crickets from the haters on how well these plays been killing it during this whole time. American Airlines, Wells Fargo, Walgreens. Next, we have Bank of America. These plays wasn't hit at all during this whole crash, or hit very minimally. And that's why I put you guys in them, okay? You need to be in plays that help you be diverse for plays like a Golden Nugget that got slammed, plays like APXT that got slammed, but then you have all those winners in Bank of America, Wells Fargo, Carnival Cruise, American Airlines, Walgreens. Next, we have Tattoo Chef. Next, we have Ideonomics, Zomedica, Palantir. We also have Future FinTech. And these guys, those last three are outside of Palantir, are some easy money plays that I still haven't got out of yet. So you need to know and go through your portfolio and look at what easy money plays are you still holding, and if you want to still be holding them, or do you have a plan to get out of them. This is a free stock I got. And then ChargePoint, which now has changed over to ticker symbol CHPT, sitting at $26. Listen guys, I just want to give you guys a brief update of what I'm currently holding. Somebody please screenshot this, watch this 2 or 3 times so that you can see what plays we are in. Up next guys, we have our question of the day, and our question of the day comes from Miss May. She says, this week is a perfect example to have dry powder put away for buying power. Miss May, you are spot on guys. She can't say it any better, and I'm going to reiterate it because I tell you this all the time. Guys, we don't panic, we pounce. We love these kind of weeks, okay? For you new and beginning investors, I know this week, this is some of your first time experiencing a true volatility of a stock market. So you could have had the false impression that everything goes up and that nothing ever comes down or your plays never get hit. However, this is when I talk about perspective matters. And this is an opportunity for you guys to now see what a little volatility looks like. Did you panic sell? Did you freak out? Did you get scared out of the stock market? Okay, those are all real emotions that people go through. However, as I often tell you guys, you have to be ready for opportunities like this. This is when we go shopping. When it's blood in the streets, it's time to eat. And that's why I say you need to be adding $500 every 2 weeks or whatever you can, okay, on a bi-weekly or monthly basis. I often say when we hit the home run in these option plays, you need to take profits from that and put it in your buying power. Like me, I hide money in Nike if I ever need to buy a stock, okay? Also, you guys can, in addition to the home runs that you hit, make sure that you take some of that profit before getting into a new play, that you are keeping some dry powder on the sideline so that you can take full advantage of these down days. They come, but when they come, they hit hard, but then they go away for 2 or 3 months at a time, and then you don't get this opportunity. So that's why it's important, and that's why I harp on it, guys. But listen, when you run out of money, that is the time to be content with what you have done, okay? You gotta spend money on your plays, and then when you're done, okay? None of us are made out of trees, okay? None of us has infinite amount of money to just keep buying dips. However, like me, I bought Tattoo Chef at $19, for instance, okay? I did what I could. I saw that 17. Is 17 better than 19? Absolutely. But I had to be content with sitting in Tattoo Chef as an example at 19. I had to be content with sitting in APXT at 12. I couldn't get it at 10.50 or 11 where I saw it because I was done putting any more dollars into that play. Now I'm going to sit back, put my feet up, and let this ride all the way back up, hit a home run, and then we're going to celebrate together. But listen, guys, I hope that was helpful. If you have questions or comments, leave them below. I'll grab them and add them to my next video. Listen, I make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll see you all in the next one.